time for our 360 round. We're looking at nuclear stocks and the nuclear energy space. For that, I want to bring in our panel. We've got Nate Bradley, CEO of Data Vault AI, and Travis Miller, strategist covering the utilities and energy sectors, Morningstar. Thank you both so much for joining us. Travis, I want to get your take first. We had results where Oklo reported a loss of 7 cents a share. That was better than what expectations and an improvement of a year ago, but it's still so early stage. How do you interpret their results in the context of where they stand in the energy space?
Hey, I think Vistra is an interesting story here. We've seen strong results here. I think the market has gotten too excited about this stock. I think the market's gotten too excited about a lot of the nuclear stocks. If you put Constellation Energy in there, Talon Energy, even some of the smaller nuclear players, anything with nuclear in it has been a hot pick here over the last, really over the last year, back to early 2024. And probably as Nate can detail, the data center story and the electricity demand outlook related to data centers is the big driver here. The idea that nuclear is going to be a key generation source or power source for those data centers.
Okay. Nate, I'm curious to get your views on both Oklo and Vistra. Vistra reporting EPS 46 cents a share. That was in line with estimates. Revenue was just under $4 billion. That was actually a miss. So what's your view on these? And especially even as you think about Oklo, it's so early stage. How should we interpret those results?
Well, I like Vistra in that respect. 30 years at Comanche Peak, with a safe operating record. I think these things speak volumes in terms of the very elite companies that participate in this space in general. I like this space because nuclear, we're finding, can be the quarterback or the always on part of our grid. When solar and wind aren't on, solar can be. And, no matter your position with respect to fossil fuels and their use, one could obviously question the intelligence of just burning it within an instance to propel our vehicles and such, when we have these alternative sources that can provide us with such great energy. So I like both of these companies. I think that, the space does have some headwind with respect to the tariffs. There was some back and forth with respect to material costs as well. But Jefferies, has made Vistra its 2025 pick in this space, best nuclear stock, and you can see that's for good reason. They have a diversified strategy. They have that record of safe operations, and that's going to lead them to have more contracting capability. And you can see their aggressive approach with their acquisition of Harbor last year, and some of the progress that they've made in that aggressive strategy to both be diverse but also focused on nuclear. So I think that they have a good advantage in the space.
Okay, so they have a good advantage. And look, when you look at the shares, Oklo has outperformed this year compared to Vistra, but both have outperformed the S&P 500. Travis, I'm curious to know your thoughts. The 90-day truce obviously adds momentum for overall the market. It puts to rest some of the concerns about tariff and tariff risk as it relates to this sector. What are the risks that you would watch out for with regard to nuclear energy and Vistra and Oklo?
Yeah, I think the other risks, not just the data center story, but I think people need to keep in perspective that these independent power producers, so again, you think about Vistra in this group, Constellation, Talon, NRG Energy, these are not just nuclear stocks. For Vistra in particular, nuclear is only 20 to 25% of their portfolio. These are coal and gas generators still predominantly. They're also retail energy suppliers. So Vistra, they have customers, 5 million customers in 20 states. That's a lot of revenue and profits they're getting simply from serving households, not data centers, simply serving residential, commercial, small commercial customers. So the bulk of earnings that Vistra gets, similar with NRG Energy in particular, Talon, to a lesser extent Constellation, which is a much larger nuclear player. But these are not pure play nuclear stocks. These are not pure play data center growth stocks. These are independent power producers that have been around for 30, 40 years, been through bankruptcies, and are still in highly volatile electricity, commodity sensitive retail markets using coal and gas power generation to supply those markets. So I like the story more on the traditional legacy generation and retail business more so than all of the hype around the nuclear and data center business for Vistra in particular, for NRG Energy, and lesser so for Constellation, which is a big nuclear player and could serve data centers.
Okay, Nate, I want to give the floor to you. 30-second final thought on the outlook for this space through the balance of the year and honestly through beyond, because we know it takes years to build these nuclear plants that could go even beyond the current administration. What do we need to think about?
You need to be a bit of a futurist in this space, I believe, and it's a great point with respect to the underlying businesses being so traditional and being very measurable in terms of their growth. Here you have an explosion, a perfect storm, EVs, robotics, and other drags on this. Certainly, high performance computing being the leading driver of these demands on our grid. And finding the right mix in our grid to serve our country and to have the greatest service to our customers within these large corporations, I think are going to require them to continue to be diverse. I think it's a little more than hype with respect to the high performance computing. You're going to see a lot of revenue come from that.
All right. Thank you both. That's Nate Bradley of Data Vault AI and Travis Miller, Morningstar.